Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. Capital Limited took over assets of 25 lakhs and liabilities of 5 lakhs from Allore Limited for an agreed purchase consideration of 18 lakhs. Grapple Limited issued 11% debentures of 100 each at a 20% premium in satisfaction of the purchase consideration. Pass necessary journal entries in the books of Grapple Limited. Right? And it's a very straightforward sum. Okay, before we can start with the journal entries, the first thing we need to do is decide whether it is goodwill or capital reserve. All right, and the formula for goodwill goodwill is if it is positive. Capital reserve will be this equation gives us a negative answer. Okay, goodwill or capital reserve is equal to purchase consideration. Purchase consideration minus net assets. Okay, so going back to the question, purchase consideration is to the tune of 18 lakhs. Okay, purchase consideration is to the tune of 18 lakhs and net assets, remember, net assets is equal to assets minus liabilities which are being taken over. So I first need to find out what are these net assets. Okay, so 25 lakhs minus 5 lakhs, 25 lakhs minus 5 lakhs, which gives me 20 lakhs, which I can then put over here, which is equal to a negative 2 lakhs, which is basically the capital reserve. Okay, which is basically the capital reserve because it's a negative number. Okay, and alternatively, just remember if your purchase consideration is more than net assets, then it is goodwill. If your purchase consideration is less than net assets, then it is capital reserve. So we're going to have a capital reserve account, which we know gets credited. All right, so we are able to find this out by comparing it. Okay, by comparing it with by being able to compare it with the net assets, the purchase consideration and the net assets. Okay, now back here. Go ahead and putting in the entry. We are taking over some assets. Okay, we don't know what those assets are. So sundry assets account debit what comes in. Liability is always credited. We are taking over a liability. We have to create it in our books. We will credit the liabilities. Okay, credit the liabilities account or sundry liabilities, up to you. Okay, so how much of assets are we taking over? 25 lakhs. How much of liabilities are we taking over? 5 lakhs. Okay, but the difference, which is 20 lakhs, is not going to be dealt with directly because the purchase consideration is 18 lakhs only. Whose assets and liabilities we're taking over? Allore Limited, credit the giver to Allore Limited. And they're giving us stuff worth 20 lakhs, but we will only pay 18 lakhs. And that means we're making a profit, a capital profit. Okay, and therefore we credit all incomes and gains, and that's why we're crediting the capital reserve account to the tune of 2 lakhs. The same 2 lakhs which we have calculated over here as a negative number for the goodwill calculation. If it is coming negative, it is capital reserve. All right, so we have the journal entry in place, and now we simply put a narration being assets acquired and liabilities taken over, being assets acquired and liabilities taken over from Allore Ltd. And then we draw a line. Now we need to settle Allore's due, which is 18 lakhs. And they are telling us that we are giving 11% debentures of 100 each at a premium of 20%. So the number of securities to be issued, in our case debentures, the number of debentures is equal to the purchase consideration divided by the issue price per debenture. Okay, and that is going to be purchase consideration I have here, which is 18 lakhs. Okay, 18 lakhs upon those debentures they mentioned 100 rupees at a premium, 100 rupees at a premium of 20%. So we are talking about 120 rupees per debenture upon 120. Okay, and now we solve. So 6 twos are 6 threes are. Okay, 0 cut, and we have 30,000 upon 2, which gives us 15,000. So what is this 15,000? The percentage debentures. Okay, and that we'll check how many debentures. Percentage debentures is going to be 15,000 into 100. The securities premium is going to be 15,000 into 20. Okay, so this gives us 1,50,000. Is it 1,50,000? No, be careful. It is going to be 15 lakhs. All right, be very careful with your calculation. Okay, and similarly over here, this is going to be 3 lakhs. And therefore, the full 18 lakhs is being looked after. So what I've done over here is basically found out the breakup. All right, so once I have this, it's easy for me to settle Allore Limited. We are giving him debentures, giving that company debentures, debit the receiver. Allore account, of course, Allore Limited account. Okay, be very careful. Allore Limited account debit for the full 18 lakhs to percentage debentures. And now I need to see what percentage. Okay, 11%. Okay, so to 11% debentures, to securities premium, to securities premium. And okay, it goes without saying you have to make sure you're neat. Right, 15 lakhs, 3 lakhs, 15 lakhs, 15 lakhs, and 3 lakhs, which we have already done calculations for. Okay, and being purchase consideration settled by issuing how many debentures did we decide? 15,000. By issuing 15,000 debentures of 100 each at a premium of 20%. Okay, being purchase consideration settled, purchase consideration settled by issue of 15,000, 11% debentures at 20%. 20% premium. Okay, please be neat. And we draw the line. With that, we're done with this question. Any doubts, feel free to ask.